The crypto market has skyrocketed this year, with both Bitcoin and Ethereum reaching record highs over the last few months, and the crypto market reaching a market cap of $2.5 trillion, smashing the 2018 record market cap to bits. Despite some recent events, the market is currently showing no signs of easing. However, despite this, we have decided to convert over 50% of our crypto holdings into fiat currency. In this video, we will discuss our reasons for selling our crypto, and make sure you stick around till the end as we will unveil a few of the strategies that we'll be using to make significant returns from crypto over the next few years. So let's talk crypto investing on today's Investment Store. Welcome to the Investment Store, the personal finance channel that reviews a diverse range of investment asset classes from stocks and ETFs through to real estate and cryptocurrencies. If you enjoyed this video, please click the like button and leave a comment. And if you like our content, please subscribe to the channel to become part of the Investment Store community and hit the notification bell to ensure that you never miss an episode. With that said, let's commence with today's video. So let's commence with the video and for our reasons for selling our crypto holdings. Our first reason is parallels with the 2018 crypto crash. There are many similarities between the current crypto bull market and that of 2018. For those of you that aren't familiar with what happened in 2018, the crypto market hit an all-time high of an $800 billion market cap. It then subsequently went into a 3-year bear market. Now, the build-up to the 2018 boom was very similar to the current one. It was triggered by a Bitcoin price rally in early 2017, which raised the public's attention and interest in cryptocurrencies, and particularly in blockchain, the underlying technology behind cryptos. And we'll discuss more about this later. This was also when we made our first move into the crypto market, as we were attracted by the potential of the blockchain technology. Investors started plowing money into alternative coins or altcoins in search of the next Bitcoin, and the whole market exploded, driving prices to record highs. At the Investment Store, we made more returns over the course of 1 year than we had made in the previous 10 years combined. That's how significant the gains were at the time. However, things turned sour very quickly. The problem was that by the end of 2017, it seemed that everyone was talking about crypto. And as the old adage goes, this is always the time to consider selling. Unfortunately, we didn't follow this advice and ended up holding on for dear life or hodling our crypto coins. The result of this is that we saw some of our holdings reduced by over 90% in value. And of course, we learnt a very painful lesson in the process. Fast forward 3 years, and we're seeing the whole scenario play out again. Bitcoin rally, followed by altcoin rally, followed by your gran offering you crypto advice. This is a recipe for disaster, so we're taking our profits now. Our second reason for selling? Little or no fundamentals behind this bull run. As mentioned earlier, during the crypto bull run of 2017-2018, the rise of the crypto market was mainly attributed to the public's growing interest in blockchain technology. At the time, blockchain was being touted as the next evolution of the internet, and many organizations in the private and public sectors were experimenting with the technology. This gave rise to a wave of blockchain projects who were raising capital through initial coin offerings or ICOs. Now, with the benefit of hindsight, we now know that a number of these ICOs were indeed scams, and that blockchain, whilst being a useful technology, has not been as impactful as we had expected. Despite this, the key thing to note is that there were some fundamentals behind the 2017 bull run. They may have been weak fundamentals, but they were fundamentals nonetheless. Now, if we fast forward to the current bull run, there are hardly any fundamentals in place that support these current prices. The rate of blockchain adoption has not increased significantly, and cryptocurrencies still haven't reached a stage of widespread use. Therefore, today's bull run is mainly speculative. Now, it's true that a key driver behind the current price hike has been concerns over failed or risky monetary policies being carried out by central banks in response to the global pandemic. However, we believe that the main driver is investor FOMO, or fear of missing out. And as history shows us, when this happens, things are almost certain to end in tears. Our third reason, inactive blockchain projects. Now, as mentioned earlier, we believe that over 90% of crypto projects are glorified Ponzi schemes. Let me demonstrate this to you. A good way of monitoring the progress of a crypto project is to review how active their repository is on GitHub. For those of you that don't know, GitHub is a software development sharing platform where developers around the world can contribute to projects. And it lends itself nicely to blockchain projects, as most of them are community-driven projects. Now, if we take this example, and we won't name the project or the crypto for confidentiality reasons, we can see that there are less than 50 repositories on this project and that there has been little or no activity over the past year. Now, clearly, we would expect to see much greater level of development on this project, given that the coin has a staggering $100 million market cap and was meant to be completed and fully operational in 2019. What's both amazing and also concerning is that despite the delay in this project and the likelihood that they've probably run off with investors' money, people are still pumping money into this coin. Now, this is just one example, but there are literally thousands of examples of these cryptos, some of which are cryptos you're probably investing in right now. Finally, our fourth point for selling up is low demand for crypto tokens. Now, most crypto investors have no idea what they're buying. The majority of cryptos are actually utility tokens that can only be used on a blockchain platform, which in most cases doesn't even exist yet. So in other words, most tokens have no real-world value, so are completely worthless. Again, it's staggering to think that people are actually putting money into these coins. So clearly, this all spells disaster in the long term. However, as Warren Buffett says, predicting rain counts for nothing. It's building an ark that counts for everything. So here is our bulletproof strategy for profiting from the inevitable crypto crash. Our crypto profiting strategy is broken down into 3 steps. And having seen the crypto crash and bear market unfold in 2018, we're confident that this strategy will deliver significant profits at each step. Step 1, cash in. As mentioned at the beginning of this video, we have cashed in over 50% of our crypto holdings. Now, although we made big losses on most of these coins in 2018, because we held onto our crypto and in some cases accumulated more during the bear market, we have ended up making a significant return on some of these coins displayed, to name a few. We've also sold some of our Ethereum, but have not sold any of our Bitcoin. We're generally bullish on these 2 coins, but will sell if the returns prove too attractive to resist. Step 2, go short. A predictable trend line is like gold dust to a technical investor, and that is exactly what we believe we'll be dealing with at some stage during the next 12 months. Now, we don't promote technical trading as it carries plenty of risk for the average investor, and you really need to know what you're doing. However, in this instance, we are fairly confident that we will experience a predictable downward trend line that carries little risk, and we will be poised to capitalize on this once the inevitable bear market is in full swing. Step 3, buy low. To quote Buffett again, be fearful when others are greedy and be greedy when others are fearful. We believe that another crypto bear market is inevitable and that the sector will fall under intense scrutiny and criticism once again. Whilst we may not witness the same lows that we did in 2019, we will still hit some opportunistic lows. And at this point, we intend to start buying a few select cryptos again and will hold these until they pump again. Then we'll continue to repeat the cycle again and again and again, until the wheels fall off. To conclude, Winston Churchill famously quoted, "The further backward you look, the further forward you are likely to see." This quote sums up the current state of the crypto market perfectly. Human nature is a very odd thing. The majority of investors either suffer from short-term memory loss or just simply choose to ignore past events. This is the reason why we constantly experience booms and busts in all markets. And the crypto market is extremely susceptible to this because it's not a very efficient market and prices are mainly driven by greed, instinct, or emotion. Now, as shrewd investors, these three factors should never rule our judgment. And as long as we can control this, we stand a very high chance of making big returns on our investment. Now, we can make more videos on our crypto profiting strategy if we receive enough interest from viewers. So if our approach resonates with you, then please leave a comment below. Thanks for watching. If you enjoyed this video, please leave a like and let us know what you think of our findings. If you'd like to learn more about how we analyze assets, then please subscribe to the channel and visit our website. We look forward to seeing you on the next video.